Have you ever wondered why people use whole life insurance for the infinite banking concept? Well, stick around to the end of this video and we'll give you the top 6 reasons why whole life is the best tool for infinite banking. I'm Olivia Kirk.
And I'm Tim Yurek. We're from Tier 1 Capital and we're here to help you regain control of your money.
For the best advice on controlling your money, be sure to subscribe to our channel and don't forget to hit the notification bell to be notified when we upload new videos. So let's get started.
The first reason we use whole life insurance for infinite banking is because of control. Let's face it, you can't regain control unless you're actually in control. Life insurance is a unilateral contract. What does that mean? Well, one party, the insurance company, has a binding obligation. They have to guarantee the cash value, the death benefit, and any other benefits. The other party, the policy owner, has very few promises, which is basically to pay the premium. Once the policy is approved and put into effect, the insurance company is working for you. That is control.
Number 2 is safety. Life insurance companies reserve 95 cents of every dollar that's deposited. In contrast, banks only reserve 2 cents for every dollar that's deposited. Based on that, where do you think your money is safer?
During the Great Depression, over 9,000 banks in this country failed. In contrast, less than 0.5% of all life insurance company assets were impaired.
That's a big deal because people who owned life insurance contracts during that time were not only able to access their cash value to weather the storm, but they were also able to access it to take advantage of opportunities that arose during that time.
Exactly. One of the best examples of this is J.C. Penney, the American retailer. He had over 1,400 stores before the Depression, and he actually borrowed against his life insurance to keep his business open and weather the storm of the Great Depression. This takes us to our third reason, guaranteed growth. Life insurance is actuarially designed to have more cash tomorrow than it does today. There's no chance for market loss. Because your growth is guaranteed, your money is allowed to continuously compound. This takes us to our fourth reason, collateral opportunities.
What does that mean?
Collateralization is important because it allows you to access your money without interrupting compounding.
It's like your money could be in 2 places at one time.
Collateralization means that your money is always in your policy, and if you want to access it, the insurance company gives you a separate loan and puts a lien against your money, your cash value. When the loan is paid off, the lien is released, and your money is exactly where it would have been had you not borrowed. In essence, your money has been able to achieve continuously uninterrupted compounding.
Number 5 is tax-deferred growth. Money grows in your policy on a tax-deferred basis.
Keep in mind, that doesn't mean that it grows tax-free.
But you can access it on a tax-favored basis through the loan provision.
Point is, you can't accumulate wealth in a taxable environment. Let me give you an example. If you start off with $1 and that dollar doubles every year for 20 consecutive years, meaning that you earn 100% interest each and every year for 20 consecutive years, at the end of 20 years, your dollar would have grown to $1,048,576. However, you didn't pay tax on that money. If you had to pay tax in a 25% tax bracket, how much do you think you would be left with after tax?
Well, 25% of 1 million is 250,000, so I think we'd be left with about $750,000.
The reality is you would end up with $72,571.
What happened to the rest of the money?
Well, it was never there. Your money was never allowed to double. You were never allowed to earn 100% interest because you had to pay taxes each and every year along the way. That's why you end up with less money in a taxable environment.
The moral of the story is it's impossible to accumulate wealth in a taxable environment.
Exactly.
Number 6 is asset protection. Life insurance is protected from creditors, predators, and legislators.
Life insurance is regulated by the 50 states. Each state has different levels of asset protection. Check with your state to see how much protection you have on your policies. But let's face it, if somebody can get your money, is it really yours?
Let's recap the 6 reasons why we use whole life for infinite banking. Number 1, control. 2, safety. 3, guaranteed growth. 4, collateral opportunities. 5, tax-deferred growth. And 6 is asset protection.
My mentor, Nelson Nash, author of the best-selling book, Becoming Your Own Banker, said it best. Wealth has to reside somewhere. What better place than a whole life insurance policy? a free contract between free people.
If you'd like to get an insurance policy designed for infinite banking, visit our website at tier1capital.com and schedule your free strategy session. If you like this video, please give it a thumbs up and don't forget to subscribe to our channel. And remember, it's not how much money you make,
It's how much money you keep that really matters.